Ladies and gentlemen, the vaults are empty. While you were sleeping, something catastrophic happened in the silver market. The Comex, the place where they tell you the more real price, is set. Just got hit with withdrawal notices that would make your head spin. We're talking about physical metal vanishing from registered vaults at a rate we haven't seen since 2021. Tons of silver, gone, pulled out into the darkness where you can't track it anymore. And here's the sick part. The price barely moved. You see red candles on your screen. You see the chart bleeding downward like a wounded animal crawling through the desert. And you think to yourself, maybe I should sell. Maybe silver is dead. That's exactly what they want you to think. Because while the paper price burns on your computer screen, the physical metal is disappearing from the warehouse floor like snow in a furnace. Somebody knows something. Somebody is draining these vaults like a thief in the night, buying at paper prices before the trap snaps shut. This isn't a dip. This isn't a correction. This is the final wealth transfer before the shortage goes public. The algorithm wants you scared. The banks want you liquid. They want your metal back so they can cover the short positions that are about to detonate in their faces like a grenade with no pin. But you're here because you see through the smoke. You're here because you know that when vaults drain and prices drop, something is broken in the machine. So let me show you the physics. Let me show you the smoking gun they're trying to hide behind manipulated charts and fake sell-offs. Let's talk numbers. Real numbers. Not the fantasy prices they paint on your brokerage apping. In the last 72 hours, Comex registered silver inventories dropped by 4.2 million ounces. That's not a typo. 4.2 million ounces, gone from the vault, transferred to eligible status, or completely withdrawn from the system. Now, eligible silver means it's still physically there, but it's no longer available for delivery against futures contracts. It's locked away, spoken for, owned by someone who isn't selling. Registered silver is the ammunition the Comex uses to settle contracts when traders demand physical delivery instead of cash. And that ammunition is evaporating like water in Death Valley. We're now sitting at roughly 58 million ounces of registered silver in the entire Comex system. Sounds like a lot, doesn't it? Until you realize there are open interest contracts representing over 900 million ounces of silver exposure. That's a 15-to-1 ratio. 15 paper claims for every 1 real ounce sitting in the warehouse with a delivery tag on it. This is musical chairs with a burning building, and the music is about to stop. But here's where it gets darker. While registered inventory is collapsing, the paper price is being walked down like a dog on a leash. Silver dropped from $32 to under $29 in a matter of weeks, even as demand for physical coins and bars hit record highs at every major mint on the planet. The US Mint can't keep silver eagles in stock. The Perth Mint is rationing product. Dealers are charging $5 to 7 premiums over spot just to cover the shortage at the wholesale level. You're telling me demand is exploding, supply is vanishing from vaults, and the price is going down? That's not a market. That's a crime scene. This is the signature of a fractional reserve system reaching its breaking point. They're selling paper contracts they can't deliver on, suppressing the price to keep the illusion alive for just a few more weeks, while insiders drain the physical before the public catches on. Look at the lease rates. Silver lease rates have spiked into positive territory, meaning it now costs money to borrow silver for short-term delivery. That only happens when physical metal is scarce and lenders are demanding a premium because they know they might not get it back. This is the market screaming that there isn't enough silver to go around. And here's the kicker. India just imported 350 tons of silver in November alone. China's silver exchange reported drawdowns of 1,200 tons in the last quarter. The East is hoovering up metal while the West plays games with digital contracts and margin calls. They're loading the vaults in Shanghai and Mumbai, while New York vaults echo with emptiness. This is a wealth transfer in real time. Physical metal flowing from west to east. From weak hands who trust the paper price to strong hands who understand that silver is money and everything else is just credit. The shorts are trapped. The bullion banks are trapped. The Comex is trapped. Because if even 5% of those paper contract holders stand for delivery, if they say, I don't want your cash, I want my metal, the system detonates. There isn't enough silver to cover. There never was. And judging by the vault drains we're seeing right now, someone with very deep pockets and very good information is making that move before the crowd realizes what's happening. The smoking gun isn't just smoke anymore, it's a forest fire. And they're trying to convince you it's just a candle. So who's behind this? Who is orchestrating the greatest silver heist in modern history while tanking the price to keep you from noticing? The usual suspects, the bullion banks, the algorithm traders, the central planners who can't afford to let silver reflect its true value because it would expose the fraud baked into every fiat currency on Earth. Let's start with JP Morgan. For years, they've been fined, investigated, and slapped on the wrist for precious metals manipulation. And what did they do during those years of suppression? They accumulated physical silver, quietly, relentlessly, building a hoard estimated at over 1 billion ounces, one of the largest private stockpiles of silver on the planet. They sold paper, they bought metal. They used the suppressed prices they created to load up on the real asset, while retail investors got shaken out by engineered crashes and fake sell signals. This is the playbook. Rig the game, control the price, accumulate the asset. Then let the price explode when you're positioned on the right side of the trade. But it's not just JP Morgan. This is a coordinated operation. The LBMA in London, the Comex in New York, the Shanghai Futures Exchange. These are not independent markets. They're connected by arbitrage flows and dark pool transactions that move metal around the world while keeping the price locked in a narrow range. When demand surges in Asia, they lease silver from Western vaults to meet delivery obligations. When lease rates spike, they smash the paper price with naked short sales to scare physical buyers away and relieve the pressure. It's a shell game. The metal moves, but the price stays controlled until it doesn't. And right now, the mechanism is breaking. The shorts can't suppress price anymore without draining vaults to dangerous levels. The arbitrage is widening. Physical silver in Asia is trading at massive premiums to London spot prices because there's not enough metal to close the gap. This is the squeeze forming, not a Reddit squeeze, not a retail FOMO pump. A physical squeeze driven by supply-demand physics that no amount of paper contracts can fix. China knows it. Russia knows it. India knows it. That's why they're buying tonnage while the West sells futures contracts backed by nothing but promises and printer ink. The East understands that silver is the Achilles heel of the dollar system. It's monetary metal with industrial demand that can't be replaced. You can't print it, you can't synthesize it, you can't repo it into existence with a keystroke. And when the shortage goes mainstream, when manufacturers can't get silver for solar panels and electronics, when mints can't produce coins, when the Comex fails to deliver on a major contract, the price will gap up so violently it'll make the nickel short squeeze look like a practice round. They're trying to hold the beach as the tide comes in. They're building sandcastles while the tsunami forms on the horizon. And every ounce they pull from registered inventory to keep the con alive is one less ounce available when the margin calls start and the scramble for physical begins. The villain isn't hiding anymore. The mechanism is exposed. And the end game is in motion. So what do? If you're holding physical silver right now, you do nothing. You sit there like a rock in a hurricane and you watch the paper traders panic while your metal gains weight in your hands. Because here's what's coming. A gap that will rip through resistance levels like a chainsaw through paper. When the Comex defaults or suspends delivery or settles in cash only, the illusion dies and the real price discovery begins. Silver will trade at $50 while the futures market shows $30, then $60, then $80. And the people who sold their metal for fiat because they believed the manipulated chart will watch from the sidelines as generational wealth transfers to those who understood the difference between price and value. Do not sell your ounces for paper dollars. Do not trade your silver for digits on a screen that the Federal Reserve can conjure out of thin air with a board meeting and a press release. You are holding the asset they can't print, the metal they can't fake, the wealth they can't confiscate with inflation or bail-ins or negative interest rates. The vaults are empty. The shortage is real. And the people draining those vaults right now aren't doing it because they think silver is going down. They're doing it because they know what's coming. They know the music is about to stop, and there aren't enough chairs. So when you see red candles and fake sell-offs, remember, the price is an illusion. The metal is real. And right now, the real metal is disappearing while the fake price bleeds. That's not a sell signal. That's a screaming buy signal for anyone who understands the game. The storm is here. The vaults are drained. The squeeze is forming. And history is watching to see who held and who folded when the greatest silver shortage of the modern era began in the darkness of a November vault drain. Stay sharp. Stay physical. And whatever you do, don't give them your metal. Subscribe now, because what happens next will rewrite the precious metals market forever.